Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
So the market implications and the pullbacks in the markets as well. So I'd love to get your thoughts on the 10-year Treasury hitting 3% and the implications on the market.
Well, I think that the market is trying to do its only job, and that is to, and I'm referring to all these markets here, determine fair value, 3% or higher. I mean, you know, we're in fantasy land here. I mean, what's the actual cost of debt? We see the ramifications of this rigging in the bond market by world central banks for yield curves flattening around the world, inverting in some places here. We're marching right down that path. I've been warning people about an inverted yield curve coming for probably about 2 years. People thought I was crazy back then, but we're getting kind of close to an inverted yield curve here. The 10-year yield right now it's been more or less of a balancing act here with what the dollar is doing, and that is going to dictate where stocks move going forward. And the Fed, as always, they're walking a tightrope here. They're going to get it wrong. They never get it right, and they're way behind the curve with regard to raising rates here. But again, their narrative is just trying to keep the markets propped through the midterm. So we'll see how that plays out.
Well, you talked about the dollar. The dollar has been seeing some strength the last week or two, couple of weeks here, and many are calling this a dead cat bounce, short-term strength. Peter Schiff, for instance, I was listening to him. He doesn't believe it, and considering the dollar is just on this death spiral. Obviously, going back to the creation of the Federal Reserve, what are your thoughts with the dollar, and then going back and tying that into interest rates that we're seeing?
Sure. First of all, it's no secret that I'm a big-time dollar bear. I think everybody knows that. I think it's a dying asset. Yeah, we're seeing this little bit of a bounce here. It really shouldn't surprise anyone. I think we watched the dollar pretty much fall all of last year, most of this year. It's been kind of floundering here and there. Also, no secret that the Trump administration wants a weaker dollar for a multitude of reasons. They're going to continue to pressure the dollar. The dollar itself being to keep adding these to a digital screen and whatever they have to do to keep it low, to keep it weak. And that is also stock market positive. That's another reason. I mean, it all plays in together here. And like I was saying earlier, I don't know if I was talking about this, but there's really a very precarious kind of a balancing act here going on with what the dollar is doing and what the 10-year is doing. The 10-year being the benchmark, weaker. The effect on bond yields and the markets is pretty evident. We've been seeing this, and what's going on here is if they can keep that dollar low, we can push out or push higher the 10-year yield without it really affecting the market. So there's this balancing act that's going on here now. Just going back to Jeffrey Gundlach and his red line saying the 10-year was 2.6. This is like a year or so ago, maybe it's over a year ago, but I don't think he was factoring in what would happen to the dollar since that time. To watch the dollar lose strength and subsequently has pushed that line further. Now, recently, we've seen the 10-year yield at 3.11, 3.12, I think, and the stock market was bouncing up against that, and subsequently, doesn't like rates there. That's I hate lines in the sand. I hate saying where they are, because there is no lines in the sand in this market. Everything is fluid. Everything is moving. Everything, one thing aspect of this market is dependent on something else. So red lines just don't work. But I think this case here, with the dollar relationship to the 10-year, it's going to affect stocks moving forward. And I think that's the situation that they're stuck in here, because they must keep this market moving higher, despite the fact that we are seeing stock buybacks by companies we've never seen in history this year. The biggest stock buybacks ever. A lot of people are attributing it to President Trump's tax plan. These companies buying back their own shares of their stock because they want to also, give back to their shareholders. Meanwhile, all they need to really do is raise the dividend. If they really wanted to, give cash back to their shareholders, what would they do? They should raise the dividend. But you can see how it's part of the in our face rigging of the market popped up. In my opinion, look, it's no secret, and I would imagine to anyone that's listening to this, that follows your work, that this is la la land. This is fantasy land. We've seen this before. This is really nothing new. Actually, maybe the distortions are greater this time. But these markets run in cycles. We're due for this market, and I mean that based on valuations, due for a substantial pullback. Will we get it? I don't even care. I just want to find out where the market's going and trade it accordingly. But I think a lot of people are going to get here, and that's what bothers me. But the mainstream narrative, it's a joke. But they're going to keep that going to brainwash the masses. Let me promise you that.
Yeah, Greg. One of the things I've been telling people is fundamentals ultimately matter. In a world where Amazon continues to go to new highs, Tesla, no profits, but has a crazy valuation.
I know.
But fundamentals do ultimately matter. And I got to ask you, with the dollar and with what the Fed is doing, are we seeing just a hidden tax on the people? Is it easier for the central bankers to just inflate the currency, to tax the people, for the population to swallow that, versus attempting to go and nominally tax the population with higher taxes?
They have no choice, and I have been saying this for literally, I don't even know how many years. They are going to continue to inflate, and no choice here. They've created I don't know another way to say this, a financial Frankenstein that has enriched a lot of people, and it's going to hurt a lot of people on the way down when this whole thing corrects fair value. I want people to understand that this thing, this moment in time that we're in now, it's a bubble being built up on the back of the debt bubble. Everything has been reinflated. The powers that be, Federal Reserve, all the world central banks, who are all doing the same thing at the same exact time. So if anyone has any doubt that there's a collusion going on between the world central banks, they're obviously deluded. There is people argue with me all the time about this, and it really does drive me nuts. I said, well, explain to me then, sir, why is it that all central banks are doing the same thing at the same time? Is that just some kind of random act of the universe, or do you think they're actually, coordinating this? Some people just don't, they can't see these things. That's going on here. They've buried the world and all of us in it under this umbrella of debt, which is going to close on all of us. It's a horrible thing. But right now, their goal seems to be to continue to inflate, continue to keep things propped up, and the longer they do that, the worse, obviously, these distortions will get. And they're going to do things, and they are doing things that we can't understand, we can't believe, we don't know, for their own selfish reasons would be. And I sincerely believe that we're going to see a lot of the same things that we did last time. It's simply a legal way to move a large amount, an astronomical amount of cash from one group of people to another. And that's it. That's what we are. The Fed, these world central banks deliberately inflate these bubbles and they allow them to deflate. And this is how this mechanism works. It's very sad, but it's so true. And all anyone with one eye open has to do is just look at history a little bit. And in this guy, I don't want to hear someone tell me, well, history is, no determination of where the future is. Well, I say nonsense to that because this is repeating over and over again.
Greg, yeah, it's such an interesting thing. And, just to further wrap my mind and the minds of the reviewers around this concept, you talked about central bankers colluding, and acting in unison all at once. So I guess my question is, does the U.S. fall and does everyone fall in unison? And usually when there's some sort of collapse, it's in relation to someone else. There's some sort of shift in purchasing power. If some person sells, someone's buying on the other end, for instance. You know what I mean? There's this shift of purchasing power. And I'm wondering, where do you think that shift in purchasing power is going to take place?
I believe we're going to see, this is going to be global, and it's going to happen simultaneously. Everything that we're seeing here is predicated on something. It's all about links in a chain, if you want to put it in a perspective like that. What we are going to see, and it should be evident to everyone, we're seeing just little shots across the bow, I suppose, at how this has the potential to play out here. I believe, and I'm not the only one saying this right now, there's a lot of very lofty people out there, including prior Federal Reserve chair people, President Wall Street banks, saying that there is a potential here for a very sharp, very rapid spike yield. What would that do? It's just so simple. It would have the opposite effect of what has been happening now. The environment here is a deliberately created environment of risk. You can't go anywhere else. Where are you going to go? You manage to suppress the hell out of certain assets here, and that will continue for a while until it doesn't. But once we get this spike, and it's coming, I mean, who in their right mind, I mean, just for an example here, the spread between a 10-year and a 30-year is about 14 basis points. You're going to lock up your cash for 20 more years for 14 more basis points? Are you kidding me? What are you smoking? What are you shooting, snorting? But there's going to be a moment here when this whole thing is, this charade is revealed. People are going to dump this stuff. They're going to run for the hills. Once they dump that, yield will be simple to understand that. Now, what does that do? As yield spike, that's going to put a lot of pressure on the stock market. You can get a simultaneous sell-off. Stocks at the same time, and this cash doesn't go to money heaven like we were just talking about. There are going to be buyers and sellers, and it's just going to look for somewhere to go. It's going to look for somewhere to go. It's that simple. And in my opinion, it's going into commodities. It's probably going to go into, or at least attempt to, manage to squash these things into cryptocurrencies. I happen to believe in them. I own cryptocurrency myself. I own gold. I own silver. I own platinum. I own other assets here. You have to be diversified in things, but I'm just saying here, looking at where the fluidity of this, where to go, is really the question. And we've seen some of that before, and during 2000, sort of spike in gold, sort of spike in silver. But that's really the most logical way that I can imagine that this is going to play out here, when all of this reacts to fair value, and that's what we're going to see at one point.
Greg, you mentioned cryptocurrency, and I wanted to touch on that. I know you're favorable toward cryptocurrency. Not everyone in our sector is. Not every, and that's just in general, right? Nobody has the same sort of mindset, and that's fine. But I'd like to get your thoughts on cryptocurrency, especially in light of what we've seen over the last few months. The enthusiasm in crypto hasn't been there the way it was on the uptrend in 2017. So what are your thoughts here on Bitcoin specifically, and then maybe some of the others, but where's your sentiment at the moment on these assets?
Well, if I had a choice to hold the dollar or one of the top cryptocurrencies, I think the answer is pretty obvious. I would rather hold Bitcoin, Ether, Litecoin. I do own all three of these. I happen to really like Ethereum at this particular time. But anyway, that's neither here nor there. But this is what I would not like to see. I do not want Wall Street getting in on any of this like they did with Bitcoin. That's what really put the top end, or at least the recent top to Bitcoin. I warned everyone how it would play out before it did. I explained to them in detail how once the future exchanges started changing, this would end very badly. This was about 2 weeks before when Bitcoin hit almost 20,000 here. I told everyone to sell it. I said it's time to get out, and we'll just ride. You sell it, you lock up your profit there. Most people did not do that. I got ridiculed. I got talked down to. I mean, you can't imagine. I got hit on every single cryptocurrency website out there, but I was 100% correct. Many people have written to me. In fact, some authors, people who own those websites, were like, "Greg, you were absolutely right." And you know, it's very sad because a lot of people are on the wrong side of that. And I can tell you the fallout from that. Still today, I get people writing to me about what they did. Some people got so caught up in the hype, they sold their mortgage, their houses, took out loans to buy Bitcoin, planning on just like a short-term thing. I had one guy. He wrote to me. He's like, "Greg, I just sold my car to buy Bitcoin, and then the thing dies. I can't go to work. I thought I'd hold on to it for a week and make it $2,000, $3,000, $4,000 profit." This is what happened. People got caught up. I don't think. But with that said, I want to see Wall Street's hands off of this. I want it to stay deregulated. If you know, we're hearing a lot about this lately. Regulation. This is how they're going to screw everything up, or basically try to rig it, just like they did with the futures exchanges here. Which I'm not going to go through again because I did outline this at length. I've written articles about it. I talked about it on my own blog. And so if you want to go look into the archives, please feel free. But that would be my only, why I would become bearish at this point. I'm still bullish on cryptos. I don't know if we're going to see another big spike like that again. I don't think it's going to happen in the near future. Because like I explained to you, I think that they're going to do what they have to do to keep it under control. It seems like Bitcoin being the kingpin here of, you know, it's the most well-known. And I think the price action of Bitcoin dictates the price action of a lot of the other cryptocurrencies now. Despite that Bitcoin does have a lot of flaws in it with regard to the blockchain and how it trades and how fast it trades and interacts. That's again a whole other thing. But in the grand scheme of things, I am still bullish here, and I still have mine, and I will hold on to it for now. I'm not adding to any of my positions. I have not added to any of my positions with cryptos in a while. Doesn't mean I'm not going to. Doesn't mean I'm not going to sell it either. Mm-hmm. And I'm holding it for now.
Yeah, that's the nature of bubbles. And I'm not calling Bitcoin, suggesting that it's over by calling it a bubble, but surely the move we saw up to 20,000 in hindsight was very euphoric. But the nature is you don't know when the end is. That's the problem, and that's what a lot of people were saying. Well, you know, hopefully there's a little more in there, you know, and that last bit of the blow off top is just so exciting. Where you know it's going from 5,000, 10,000, 15. You know, all the way up to 20. You don't know if it's going from 20 to 50,000, you know, for another big run there. And that's the only problem, because, you know, people just didn't know where that was. And, you know, people who got in at 10,000 were feeling like geniuses. And it's just the nature of bubbles. And I really took a lot of time to think about the psychology of what was going on during 2017, during the cryptocurrency craze, because, you know, the next time this happens, you know, I want to have a little more of a, you know, an understanding of the nature of bubbles.
Yeah, it is true. It's definitely a tricky kind of a situation to kind of make, you know, at least no one can predict when you're going to see a mania like that here. But I did write articles when I told people when Bitcoin was 2,700. I told everyone, I wrote an article about it, that it was going to $5,000. When it hit 5,000, I wrote another article. I said it was going to $10,000. And that's exactly what happened. I actually found a timeline where I thought it would go there. And then when it got beyond that, actually I wrote 10,000 and beyond. I started saying to myself, in fact, I sold Bitcoin at that point almost at 10,000 or so. I had been buying it from much lower than that. But that to me was kind of evident. I did not see that mania, and a lot of people kind of like, made fun of me. Oh, got out too early. No, I didn't. I made over 300% profit on my Bitcoin in a matter of weeks. So I wouldn't call that being successful at all. But that's just the way people are, and it's those same people, unfortunately, who got caught on the wrong side. And I wish people would have at least listened to my explanations, and they just disregarded it. But that's okay. Look, it don't matter. This with Bitcoin and with these other things, are we going to see another debt again? It's very hard to say. I personally would not. I don't want to see another meme like that. People are going to get hurt. People don't alluding to. They're not going to know what to do. They're going to get caught on the wrong side of it, and that's unfortunately what happens at the top of all these kinds of bubbles. I practically help them, and I could. What am I going to do? What am I going to do, Greg? I lost all this money. What do I do? How do I get it back? I can't tell you how to do that. I don't even know how to do it. It's insane. I didn't tell you to buy it. Why would I tell you to sell it? Or well, whatever. It's just so crazy. But I don't know.
Sure.
Let's just hope it doesn't happen again in any aspect of this market. I don't like to see people get burned. I don't like to see people get hurt. People got to get the greed. Look, it's good to be greedy. To a certain, that greed is good, but this becomes a little too much, and you should be happy. What I do, for an example here, when I enter a trade, I don't sit there and say to myself, I am going to make every attempt to get out at as high as I possibly can if I'm on the long end of that trade. I will put a target. I will be happy with this, 5%, 10%, whatever the percent might be. And once it hits that, I'll sell it. And I don't care where it goes after that. It's a successful trade. This is how I operate. You can't be overly greedy because you will get hurt. So for looking at trade in anything, the first thing you should, when you enter that position, think to yourself, okay, what will I be happy with here? What kind of a loss will I be willing to sustain as well? Hell, I'll be the first person to tell you not all my trades are successful. Hell no, no one's is. I don't care who you are. But you also have to put a limit on that too. And this is specific way I enter trades, and I outline this for everyone. It's completely free. It's an outline that a brief website. Just download it. It's really free. I don't ask for anything, but it basically outlines how to maximize your gains, minimize your losses. You can half the time and still make money. It's not that complicated. But when people get greedy, when people start to want more than they really are entitled to, they get themselves in trouble. Time and time again, never fails.
Yeah, Greg, you're so right on that, and you make a lot of sense when it comes to just getting into the trade, getting out, and making money. I mean, what a powerful principle! So simple, but yet so powerful. But what I would tell you then is, I guess precious metals is the next thing we're waiting on to have that massive Bitcoin style move, and I think it would be very easy for us to buy now, which many are, but then get out too early because we saw a move in gold, let's say go to 2,000, but then watch it go from 2,000 to 10,000, let's say, and go through that, Bitcoin style euphoria. So, maybe just let's conclude the interview here with just some closing thoughts on precious metals, but with that in mind.
Sure, absolutely. Well, as I said earlier, we're going to see cash leave the bond market, cash leave the stock market. It's going to make its way into commodities, gold and silver as well, platinum, palladium, more so silver and gold, more so silver, in my opinion, than anything else. I love the metal, but we also know what's going on here, and I people do the research here. The London gold fix is completely rigged. There's no real price discovery mechanism behind gold or silver. The COMEX right now, I'm going to just a whole piece on this. Where he explains that for every 1 ounce of gold at the COMEX, I think, and I could be wrong on this number, there are 562 for every 1 ounce. So this is how they've managed to rig the price and suppress it. Although, think about it, gold is loaded. These things are priced in dollars. Does it make any sense that the price is not moving up exponentially? Of course not. It should be. And at one point, there is going to become, again, with regard to every asset, where the real price is Because right now, nothing is real. We're living in a fantasy land market, which is it's even hard to verbalize. The distortions here are off the Richter scale. I mean, they're out there, and people are just to go back to gun law because I really respect guys' work. Are just whistling past the graveyard. He's been trying to warn people for a long time, but I think even this guy, he's a multi-billionaire investor and hedge fund manager. He probably can't get his head around this. It's too big. It's just so. But it's going to end the way every other one has before, where a few people are able to capitalize on it and most people get wiped out. It's sad, but that is how it's going to end. Period.
Gregory MANNARINO. Greg, thanks for coming on Crush the Street. If you would, share some closing thoughts here and obviously let everyone know where they can find your work and what they can expect to find.
Sure. Everything I have is available from my website. Lots of free stuff. Take advantage of it. I just put up a charting system there, which I put my own indicators, my own timing. It's free. You don't have to sign up. Just go play with it. Whatever ticker you want, go and analyze it. It's pretty simple, pretty straightforward. If you're not sure how to use that chart, just watch it over a few things. It's kind of simple. In closing thoughts here, I just say this. Take advantage of the markets or what we have here. It's been a gift, I think, to people. Get yourself ready here. The yield curve is a big tell as to what's coming down the pike. I think we're going to get an inversion at one particular time. Again, this is happening around the world. You know how these have played out before. Here in the United States, for example, an inverted yield curve has predicted with 100% accuracy the last 7 recessions and the last 2 stock market crashes. I think that says a lot.